peace, and love. So let's get right into trend analysis. So there are three directions of a trend: the uptrend, which I like to refer to as the takeoff; the downtrend, which I like to refer to as landing; and consolidation, which I like to refer to as the boarding phase, when the consolidation is at the bottom of an uptrend, and high altitude is when consolidation is at the top of an uptrend. All right before the downtrend. All right, so let's get into it. An uptrend. An asset is in an uptrend when price moves up to higher highs and higher lows. This occurs when demand exceeds supply. More buyers are willing to pay the higher prices for the asset over time. All right, this is takeoff. So as it goes high and comes down a little bit, high and come down a little bit, constantly moving up. Then we have the downtrend. The downtrend is when an asset price drops to lower highs and lower lows. This occurs when supply exceeds demand. Sellers are accepting lower prices to exit long positions over time. All right, so this is the landing phase. Then we have consolidation. When an asset is not trending, it is considered to be in a consolidation. This is when its prices move sideways. All right, so I call this the boarding phase. All right, uptrend lines are drawn by connecting two or more lows, while downtrend lines are drawn by connecting two or more highs on the price chart. So you see, in the uptrend, we are connecting the lows. All right, this is the floor, this is the support. So as the stock is moving up, we're trying to track the support level. Where is it bouncing from? All right, where are the buyers at? So as it goes up and comes down, where are buyers willing to pay for the stock in order to send it back up? On a downtrend is the resistance line. As we're connecting the highs together and they're becoming lower highs, we're noticing where sellers are stepping in. People are ready to offload their shares or stock or position, right? And then the consolidation phase, we call this the boarding phase. All right, so this is when the moving averages are all in alignment. They're very close together, almost like we're waiting in line, right? All the moving averages are close together and the stock is very close to the moving averages. All right, like we're waiting in line, ready to board. And then once we start the uptrend and we head up and we reach the peak, we notice more consolidation, which is a pause in the uptrend. And we typically are wondering, is this going to continue up after this pause, or are we going to prepare for landing and we're going to end up coming back down? And more than likely, we'll be coming back down to the 200 period moving average. All right, more on that later. All right, so it's very important to understand market structure. That's what this is called when we're talking about the uptrend, consolidation, downtrend. We're talking about the market structure. The market is only going to do three things. It's either going to go up, it's either going to go down, or it's going to be flat. So at the beginning of the day, sometimes the market gaps up where we start above the prices. Sometimes the market gaps down where we start below the previous day's prices. And then sometimes the market is flat where we pick up right where we left off. All right. So understanding market trend is going to be crucial in our technical analysis, right along with understanding the moving averages, understanding the support and resistance. All right. Understanding trading volume, and understanding the directions of the trend or market analysis. All right, peace and love, good people. I hope you get rich. Please subscribe to the channel, comment down below, leave a like. Let's get this video to 100 likes. Hopefully you're putting these pieces together. All right, you're gonna hear it over and over again. Okay, you can use every indicator you can find, or you can connect with 3 or 4 concepts that are going to bring you to successful trading in the market, whether it be day trading, long-term investing, swing trading, scalping, whatever it is. You need to identify concepts that are applicable and repeatable and simple. Don't overcomplicate things with too many damn indicators. All right, peace and love. See you in the next video.